Hey everyone, welcome. It is 1 p.m. on Monday, June 3rd. We just got the closing bell, and it was kind of a quiet, boring session. Really, it looked like we might have gotten a little bit more bullish in the morning, but what we got instead was that retrace, that 70% chance that we'll head closer to the previous day close, and we got that right at the open and we just kept on going down pretty much all day. And then we hit this almost this level right here. So we traversed one, two, three, almost four levels. And then we retraced back all the way at the end of the day. We came back to the VWAP and then finally broke through the VWAP. But then we just got stuck right here at the 527 level. Is this a Yep, that was right before the last minute. There was a spike right here that brought us a little bit above that 527 level, but we're not going to get too excited about that because it's really not that much volume. How much is this? Can I see? 47,000. 47,000 is not significant at all. So that's just a last minute surge. So basically, what we're saying is that the Bears were in control most of the day until the very end, where you got kind of neutral. And if we look at it from a daily basis, we're just neutral. We're really just chopped sideways. If I adjust my box that we drew on the weekly market review, I said, okay, well, instead of this sideways chopping range starting from here, I might start looking at it as this box. But even if I start right here and just look at the same sideways chopping range, then it looks the exact same, other than the fact that on Friday, the low dipped below almost the MA50. It looks like we're just still chopping sideways inside of this box. So optically, it looked a little bit like we actually moved down and then moved up. And yes, in actuality, if we looked at intraday prices, we did do that with that low. But when we're looking at the bodies of the candles and when we're looking at the closes, then it just really all we're doing is chopping sideways. We ignore tails on candles, or at least I do. I ignore tails on candles usually for the most part because there's no conviction there. There's not going to be a lot of volume there. If we look at a volume profile for just this candle, we would see most of it bunched up in the body, very little of it inside of this tail right here. So volume is where we have conviction, where we have the most volumes, where we have the most conviction, and that's up here in this body. And that's why I tend to ignore tails and wicks, or wicks and shadows. So we really just chop sideways, meaning that we don't have too much more information this afternoon than we did earlier this morning. And earlier this morning, we said, hey, we're probably going to wait for earnings and some of these reports to come out before we have a good idea of which direction this market might go this week. And it definitely feels like, based on the trading action that we got today, that the market is just waiting for a catalyst. So is that catalyst going to be some of these earnings? Maybe, but they're really not that significant in light of all the earnings that we've already had. And then we could possibly be waiting for a catalyst from one of the reports. Here we go. The economic reports. So tomorrow we have factor orders and JOLTS could give us a little bit of life in this market, but realistically, is it going to be a multi-day event? No, the JOLTS will be maybe 1 or 2 day effect on the market. So, especially given that we have the employment situation coming up, the employment situation could have a lasting effect, but not the JOLTS. The JOLTS, a few days, going into the employment situation, it might just only have Tuesday, Wednesday, Thursday. Same with the ADP and same with really all of these. So we're waiting for a catalyst. That catalyst might not come until Friday. So maybe we might chop a little bit longer, which is a little bit of a challenge when we're looking at single options portfolios. So we need to pick our stocks very carefully. Let's take a look at the sectors because on Friday it looked like money was coming back into the semiconductors and communications. When we looked at it on a daily basis during the weekly market review, we saw that actually a lot of the money went into interest rate related sectors and a couple of defensive ones. So the other catalyst that could be in this market right now is the bonds and the interest rates that are implied by the bonds. And look at that. Today, we already went to the top of the channel. Just this morning, I was saying how if we got to the top of the channel, then I would be interested in going short on TLT. And we got it in one day. I wasn't expecting, I was like maybe 2, 3, 4 days. We just got it immediately today. So that's really interesting. We're actually pretty close to this horizontal right here. So we could continue to move up and hit that horizontal and then come back down. But in any case, this is not a bad entry for a TLT short. We could wait a little bit longer, but we might just reject straight from here. So a partial allocation, maybe 1/3 right here, and then 1/3 if we hit this, and then 1/3 when we retrace back. That would be one very good strategy to leg into a TLT short. If we went 1/3 right here and just went straight down, then okay, no big deal. We just didn't get a full allocation. We still make money. If we go in here and it goes all the way up to here, we lose a little bit, but we only lost on 1/3 of an allocation. And then if we do come back down right here, then we would make money over here and a little bit better than break even on the entry over here. And then, so at that point, we'd be a little bit in profit. And then if it continued to move downwards, then we would be able to capture profit from all three entries. But this is a way of protecting us in case it does not it does not move downwards exactly from the top of or where we drew the top of the channel. Because remember, everything is always kind of sort of a region. And if I'm an institution, I'm not looking at the lines that retail traders are drawing. I'm not looking necessarily exactly at this line. I'm looking at a few other more fundamental things, especially my position, especially if I'm a money maker or a market maker for this particular market, for this particular instrument, or in this case, it's bonds. So we'd be looking really at the bond market, guys. So but we might as well. We probably have, since there's probably not going to be that much to talk about today, given the trading action that we got, we might as well take a look at what a TLT short might look like. So we go long put on TLT. We would go out to August because why? Because same as the trade before. We are expecting the collapsing of the probabilities of a 25 basis point rate cut to go down to 0 and for all of that to shove into unchanged. And that has to happen by the end of July, July 31st, because that's the rate decision. That's the day they make the decision. So when we look over here, we want to cover July 31st because what if the market doesn't wake up to that fact until the last couple of weeks or last couple of days of July? So it's better that we go out to August or maybe even September if you want to have more time value or be less volatile inside of this trade, but it will come at a cost of some profit, a percentage P&L. So I'll just take a look at it. August puts, and the current price is at 91.58. So a 92 would be just barely in the money, and then a 91 would just be barely out of the money. So normally we consider the at the money one, the one that is slightly out the money. So I would normally be looking at a 91. Yeah. Why not? 91, 176. I wish this showed, maybe it does show the deltas. I think it does. There you go. Delta. And if I 91 delta. Uh, I don't know how they're representing this table. 0, 91. Okay, so about a 44 delta. 44 delta. So that's what I'm looking for. Kind of close to 50 delta. So it's looking like a 90 would be appropriate as well, but I'm okay uh with the 91. So we'll go ahead and just put in a sample trade. TLT long a put, 91 strike put expiring August 16th. And I'll just save that as a post market TLT short. Okay. So we can track that over the upcoming weeks into July 31st and see how well that does. Of course, if we come back down and we trace down on this level, then I might consider taking profits, just like when we did it over here, if it's an aggressive move. That's what clued us in to exiting over here. Is it's a very sharp drop and then a gap down that was too aggressive. So that clued us that we might be seeing a reversal at this point. And then what did we do? We gapped up, and then a very aggressive move up into the top of the channel. So by the same reasoning, this is a good probability and good chance for us to go back into our short. If we have a nice smooth movement downwards, unlike this is not, TLT is never super smooth, but at least it's better than this. So if we have a relatively smooth movement downwards, then we'll hold through this level and ride it down to the bottom of the channel. Okay. So let's take a look at what happened with our VIX. VIX down, but not hugely down. What's our level here? 13.11. Okay, so we're still in this range. We're still in the normal range for 2024. So the fact that we did not break out of that 1375 level that we were talking about this morning, and the fact that TLT went up, but what happened to our SPY? Our TLT went up. That's supposed to be positive for stocks. That's supposed to help the stock market move upwards. And so our TLT is up 1.27%, and our S&P is down 0.08, or basically flat. Is that right? Yeah. 0.08, up 0.08. Yeah, basically flat. So the forces that might be driving the market higher, really, there was some offsetting force that kept it neutral. So that's not encouraging for us to move up and make new highs. And that is basically reaffirming the picture that we had that, hey, we might bounce up and just get stuck over here and chop sideways for a while until we have a catalyst that moves us off. Earlier this morning, we talked about NVIDIA and how NVIDIA was in the same situation. We were expecting it to maybe just chop sideways, but so far it has done, until the stock split. And that might be the catalyst for us to move higher. It might start a little bit before the stock split, but that could be a catalyst to move higher. And now NVIDIA is very close to the same market cap as Apple. So so they're competing for the number 2 largest market cap in the entire market. But if NVIDIA does catch a lot of buying because of that split, then that does have the potential to be a catalyst for us to, at the very least in the QQQ, for us to move higher. And that would take the S&P 500 with it, because nearly I think every single stock in the QQQ is actually in the S&P 500. So if I have 20% of all the stocks are moving up because they're in QQQ, well, that's going to influence, and correlated stocks might also be moving upward in the SPY, then I'm going to have a significant number, at least 25, 30, 40% of my stocks in the S&P 500 moving upwards. And that is a strong force that would potentially move the S&P 500 upwards, as long as the ones that did not get influenced aren't dragging us down, then yes, the index would move upwards. That's why every morning when we look at the futures, we see, not every morning, but most of the time when we look at the futures, we see the S&P 500 in between the QQQ and the Dow Jones, because the QQQ stocks are helping pull up the S&P 500. So right now, what we're seeing is like, let's just be neutral, because everything is just looking like that's chopping sideways. So we just need to be as neutral as possible and pick our longs and our shorts as carefully as we possibly can. Let's take a quick look at our sectors and then we'll be done. We'll just see what happened, if there's any rotation or changes to the favorite sectors today. Retail, golden. Okay, let's SMH, healthcare. That's interesting. So we have a very defensive sector right next to a very aggressive sector. Defense. So we have some defensive sectors here. And then we have COM, and then we have XLP, and then we have XLP. So we're just switching back and forth between risk and safety. So it looks like this market's confused and waiting for a catalyst. So this is exactly the behavior that we would expect creates a choppy environment and goes sideways. So we're not really seeing anything super interesting in terms of the sectors. Nothing. What's kind of interesting that retail is up so much today, but that could be some upcoming earnings. We did see Kohl's, we did see a couple of others I can't remember off the top of my head. And then, well, so some focus on retail. That's if there's earnings, significant earnings within a sector, I don't count that too much, but we did gap up. We do have a red bar and we are near highs right here. So we're probably up into resistance, parabolic, and the double top, parabolic, down, parabolic to the same or very similar height. And then we're just going to expect the exact same thing to happen. So that to pull back. So I wouldn't get too excited about retail. Then we've got, let's take a quick look at SMH and XLV. SMH, chopping sideways, still strong, very strong. Small, tiny pullback to the EMA 8 or EMA 20, EMA 8, and then starting to consolidate. That is good news for potential future strength in the next week or so, but not today. I wouldn't be entering tomorrow. I would wait for at least one more day to see if we move upward and get a confirmation bar. And then XLV. XLV moving up pretty high over the last 3 days. This is showing some strength. It's actually looking pretty good. And then we hit this region from this flat area and the highs right here is a whole region of resistance. Not a bad short-term play. And then if there is any fear that comes back into this market, it'll be defensive sector, probably outperform on the way down if the S&P 500 does move down. So maybe a position in XLV could be interesting if you are seeking to balance out risk inside your portfolio. So remember, overall, we want to keep our portfolios neutral right now. So if I do decide to go long on an XLV, I want to go short on a weak sector. And let's see what the weak sector might be. A lot of these sectors look like they're bouncing, actually. So they're showing some strength. I can't find one that looks particularly bad. I would say energies, but energies are not too correlated to the stock market. So I'd say industrials is probably the worst looking one right now, but even that's not looking super weak. Okay. So this just goes another argument for chopping sideways. So once we get through a consolidation period, then a lot of these sectors can move upwards. So it does really feel like uh, all we need is one good catalyst, and this market will start moving higher. I guess you could offset a long with a TLT short. That would make sense. So TLT very clearly in a downtrend, hitting the top of the channel, and then TLT short, and bond stock are natural hedges for each other, or they have been for decades. So to offset a long position with a TLT position is actually not a bad idea. So I'd probably go with that. If I wanted to trade TLT short and I wanted something to balance it out, like I didn't consider it just a standalone trade outside of my portfolio. If I incorporate it into my portfolio, then I can establish a long position against the TLT short. Okay, I think that's all we're going to glean out of the markets this afternoon. We just had really low volume, actually. Let me share that so we can see that our SPY, there's just really low volume. We just went right back into last week. You can see that our volume is at 45.8 million at this point. We've got most of the dark pool data in, if not all of it. So we're still just looking at really low participation. So Friday was a bit of a head fake at the very last minute. So most likely a little bit of month end activity drove us upwards, and then we're just right back into this low volume environment. So we really do need a catalyst and to need to see that volume come back into the market before we're really confident that we can lean our portfolio one way or the other instead of just staying neutral. Okay, that's it for today. Have a wonderful rest of your day, and I will see you tomorrow morning.